Hi guys, Marty with Options Unleashed, back for another video, doing a quick video today. Merry Christmas. It's Christmas Eve, hour and 37 minutes left in the trading day. Today markets close early, 1 o'clock. Let's take a quick look at what I'm looking at here. We're going to go over a couple things I'm watching, a couple trades I have. What else are we going to do today? We're going to look at some trade setups for next week. But in general, the spiders slightly up, the industrials up. Looks like the home builders are the big gainers in the ETFs today, followed by the GDX, the gold miners. Gold is up slightly, NASDAQ up slightly, 0.2%. Pretty quiet day today. But let's take a look. What's going on in the spiders. It's not much going on here. Pretty flat. It looks like if we take a look at what's driving the winners today, gonna look at I look at my watch list pretty much I sort by gainers, so it's easier for me to see what's moving when I come in, when I get in. So Apple up not much today, but 1%. Followed by United Healthcare, ServiceNow, Costco, Walmart, Microsoft. Pretty much a mixed bag. If you look at the losers, we got Moderna, we'll talk about shortly. We got 3D Systems, we'll talk about that today as well. Macy's, Kohl's, GM, Uber, Snap, all down. We'll talk about Snapchat. We'll talk a little bit about maybe Uber, some Boeing, some things I'm watching, things like that. Take a look at my longs list today really quick. These are my longs, my long portfolio. Coke, Waste Management, Clorox up today. Big losers today. Macy's down 2%, Snapchat down 2%. Ulta Beauty, we're going to talk about that today. My number one pick for next year, the reopen trade. Down $2.90. That is actually not that bad because we'll talk about it later. We want to buy more of that security, and we're going to look for options trades in that in January. Western Digital down slightly, another favorite of mine. So pretty much a mixed bag today, a lot of profit taking. Let's look at the stock playbook really quick. We talk about a stock playbook when we do option trades, right? And we're going to go into a whole video on the playbook, but when I get in the morning, typically the things that I like to do is talk about the themes. Well, this is the overall theme of the playbook for maybe the next couple months. So things that we're looking at for options trades, you need to have a plan, right? So we talk about a theme here. We have the reopen trade. The reopen trade is pretty much the thing we're targeting for profits to achieve that alpha that we talked about. We're looking for reopen trades that are below value that maybe haven't caught up. We're talking about the Macy's, the Ultas, the Under Armours of the world, Western Digitals. Those things are my reopen favorites. Even the hotels, the likes of maybe Wynn, Marriott. Within reason, we have to look at the travel stocks, Expedia, to name a few. We're looking at the airlines as well. Not so much the airlines as much as maybe Delta as a barometer and a bellwether for the airline industry, maybe Southwest, but pretty much stick to just looking at Delta as a barometer. Boeing, just from the fact that it was beaten up last year and we're still interested in that 737 MAX reopening. The industrials are looking really good, as we saw earlier or later in this year recently. And then growth versus value, there's still a bunch of debate on this, right? Is the best plan to use like a barbell approach to have some high growth? The value stocks have caught up, but are they going to continue to catch up? What's going on with the stimulus? Stimulus is passed the House almost unanimously, but Trump is threatening to veto that unless he gets a larger spending package. So that could be a news headline at any point. So keep that in mind, guys. Vaccines, we've got the Pfizer vaccine in focus, Moderna in focus, some profit taking there. We're going to talk about Moderna today. And emerging markets, don't lose sight of emerging markets, guys. It's not all about the U.S. stock market. Um, I haven't looked at EM in a while, but because I took profits in it earlier this year, so or later this year, I should say. Uh, but don't lose sight of EM, guys, because it's something that we don't want to lose sight of when we're looking at the U.S. market. We can get a little myopic when looking at the U.S. You get so focused on the U.S. and then we get a correction, and you forgot all about the EM trade, or even the bonds for that matter. So this will be the EM symbol, and then bonds. The 20-year would be the TLT we look at as well. These are just for barometers. But so today's playbook, that market's closing early today, quiet day before Christmas. Merry Christmas again, if I haven't said that. The gainers today: Tesla, home builders, Apple, ServiceNow, United Healthcare, AMD, IBM. Losers today: DDD, Macy's, Snap, Uber, Under Armour. Are we seeing some tax selling? Earlier in the year, I wanted to get into Carnival Cruise Lines, and I'm watching this one now that it's late in the year. I had a playbook that said, watch Carnival at the last half of the year, the last month, see if there's some tax selling, so we're going to look at that as well. Moderna profit taking, is it a buying opportunity? I think it was Pete or John Nigerian on Fast Money or Halftime Report said they were looking at Moderna potentially as a buying op now. So we'll look at that as well today. So let's look at some of these plays. Again, we have to put things in context, right? When you're looking at things, let's look at this S&P big wedge here. This ascending wedge is still in play. It looks like we've got further to move here. So, you know, we don't know. This thing can break out. Let's kind of quickly draw that for you. You know, the S&P can kind of move up. And then, you know, we can see it kind of a false breakout as well, and then kind of pull back to that 320 level. A lot of people are kind of targeting that. We don't know if it's just going to kind of melt up into here in January. You know, if there's no new news or no negative news, the market can easily just bounce around in here. We might get a couple false signals. There could be some, even in the last week of the year, we could see some fake outs, head fakes, where, you know, they just try to pull the rug out underneath everybody, and they take the rug out from us. But it could be a buying opportunity. We've seen that all year long, where I think Josh Brown was saying, you know, in his podcast that as soon as people shook out the Qs, they went and they chased the triple Qs. So there's still the buy the dip mentality that's very much intact. So we could see a breakout, but who's going to break out, guys? Is it going to be Apple? Let's take a look at Apple. It's actually got a chance to, once it gets through that 137, Apple could take a shot at it. Let's look at the 5-minute chart. Not a lot of stuff going on today. It's got it's a obviously quiet day. So we're watching Apple on a daily basis. Let's look at Amazon. Everyone is curious, is into Amazon. Everyone is watching Amazon. I have a little article here that I put out on TradingView. I see two possibilities for Amazon, and obviously this is part of the technical analysis. This isn't necessarily about option trading at this point, but in terms of technical analysis, you know, when you see patterns, I see two patterns forming. I see a diamond pattern, which is the bearish pattern in red, and I see a bullish pattern, which is the pennant, or what's called an asymmetric triangle bullish pattern in the yellow. Amazon hasn't decided yet. So what we need to do, and you can even see a fake out. You can see this thing kind of start to move up, and that could even reverse. You know, you can just see it quickly do one of these. You know, you have to be really careful in here. Like, you need a definitive, we need like a definitive break. If it breaks and it continues to break down. Like, so for instance, if it's if Amazon does kind of the diamond pattern, and it kind of comes down and touches this 200 day, that could be a buying opportunity, and it's kind of a false breakdown, right? You have to kind of have that conviction. You have to have that confirmation that we go lower, below that 200 day. Same thing with the pennant. Once Amazon kind of, if it breaks out, and obviously we have earnings coming up, so I don't think we're going anywhere until earnings. So we're going to come back and revisit this one. So I'm not in this trade right now. I know a lot of people that are buying Amazon above 3,000. If that's your line in the sand, that's great. Go ahead and do that. There's not a lot of volatility. Let's take a look quickly at Amazon's IV rank volatility. If we take a look at the daily over in Thinkorswim, its IV rank is 34. If we look at a trade for, obviously we have to look at earnings, but so earnings are, sorry, let me switch around here. Earnings on Amazon are 128. So if you take into consideration, if you're looking at a play before earnings, you're looking at a low vol 36 percentile, IV percentiles 36, 31. These are your average percentiles for those strikes, for those strike expirations. So you have to go out beyond earnings to really get anything meaningful in here. So basically, there's no IV rank in Amazon, so there's no real reason right now to chase this down, because you're probably going to get a head fake. So you're already now losing, losing, delta in that case. If you're looking to sell puts, you might as well wait for that head fake. And if you're looking to buy calls, you're going to get it at a cheaper price. So we're not really doing anything in Amazon here. This is a type of trade where you really do have to wait for this to decide which way it's going to break out. I know I'm flipping back and forth between TradingView and Thinkorswim. And the reason is because now I'm using TradingView because I love the drawing capabilities and charting and watch lists. I finally switched over. I'm still using Thinkorswim as my trading platform. This is just something that's really hard for option traders to give up. I know there's others out there like Tastyworks. I started looking at it. I love Tom and Tony and the Tasty Trade Network. Shout out to you guys. Merry Christmas. But I haven't really picked up the Tastyworks platform yet. So let's take a look at what else is going on in my playbook that we wanted to talk about today. So quiet day, the gainers. Let's look at my favorite pick this year, or let's take a look at my gainers today. I'm up as I sort my daily P&L by my gainers. So I'm up on Cigna, the Marriott, Qualcomm, and Ulta Beauty. Looks like I'm down on, I just put a trade yesterday on CRM, which is Salesforce. I'm still in a trade on Win, still making money there for January. Got some Kohl's, got some Western Digital. Those are, no big deal today, up $253 in the day. Not a bad day so far, and it's a short session, but what I wanted to show you was Ulta Beauty, my #1 pick for next year. Let's take a look at Ulta, right? So if you talk about reopen trades, and so here's like kind of the criteria that we have, and this is how I want to show you guys how to build your playbook as well. This is like a live session that we're doing, right? I'm kind of mixing, what I want to talk about in my videos in terms of like how to use a playbook, how to look at volatility, what things to look for, how do you craft a trade. Those are all going to be specific videos, but today I want to just go over it because it's a short session, quick video on what I'm looking at today. But as you see, as we go through this, you're going to see me kind of just following my playbook because it's ingrained in me. So I might want to put in here like Ulta, what's the theme? The theme is the reopening trade. the other thing, and kind of some of the things I do sometimes is I put hashtags like reopen, and then I'll put in here like we have the stimulus, right? The stimulus package. What else is bullish about Ulta? You know, basically it's in that comeback story. It's also it was in an uptrend previously to the coronavirus, so that's something that we look for when we want to make directional trades. Like I mentioned in my previous video, I'm a directional options trader. They seek alpha, right? So I could play a high IV all day long, but in periods of low IV or periods where we want to like really be in the market, um, you know, you need to have a directional bias, and that's actually part of my theme. Don't fight your theme. If you have a theme, if you want to play for income and you want to have a non-emotion about your trading, go for it. I like the markets. I try not to marry my stocks. That's part of the strategy, or part of the overall process that we have now, is we don't tend to marry or chase. Again, another video, but I am a directional player, so Ulta is number one pick, and if it's selling off, that's actually good news because I want to buy more. I actually own it, bought some more yesterday in our long account. So again, it was in an uptrend before the breakdown, and this stock is off to the, I think it's off to the races. You see the charting, the trend lines I drew in here. Let me try to quickly remove my drawings for you, and let's show you what I typically do. So here's what I do is I take a trend line. Really keep it simple, guys. This trend back in here was the downtrend. It broke. We look for that on our macro view. Basically, like what's going on over the past several months with option trading. Option trades, we look at 30 days out in the future, so we're looking at a weekly or monthly time frame for directional bias. That helps us kind of zone in on what do we want to do here. Nobody can catch the bottom, right? Nobody can decide, nobody can determine when we're done, when we're done bottoming. But the trend lines kind of help you keep that in perspective. It keeps you from potentially jumping on a trade. If you jump on the trade in here on an option trade, you pretty much lost money here and here and here and here. You lost money all the way. Not to say that you won't, but now that it broke this trend line, this is something that we are very interested in, right? We want to have conviction. We want to be interested. And again, because of our size, we're not going to make big option plays. If the stock goes against us, and it very well could come down here, retest this trend line, and then kind of move up from there. So keep in mind that this is completely possible. So if you're crafting up option trades, you're going to want to use these. You got to take that into consideration. This is the 200-day, this is the 50-day, this is the 20-day. Right now it's bullish on the 250, it's bearish on the 20. We have that a little bit of a scare because of the vaccine strains. Like there's 9 different strains of the vaccine. This is even a problem for Moderna and Pfizer vaccines. So people are worried about the reopen trade is kind of stalled out, if you will. So this is a nice opportunity for you guys to get your wish lists, right? So pretty much a thing here. The theme would be up here. I would put, wish list while we wait for the good vaccine news, right? So part of the theme that you're looking at here is get your wish list ready to go and be ready, right? So Ulta, could come down and easily get down to that 220 level. Let's bring up Ulta in the TOS platform, and let me remove all these indicators because it's probably killing you guys. So Ulta, again, it can test that 200-day moving average. So when you're looking at this, you know, you have to look at a few things, and we'll just go over real quick what I look at. So, and I'll write some of this stuff down as we go along. So stock playbook, Ulta down here, reopen trade. So what are the things I look for? So I'll look for the basically moving averages, get a technical analysis. You know, the first thing we did obviously is fundamentally, right, are strong. We talked about that. Sentiment is strong, right? The reopen trade, these are all strong indicators. You know, Ulta is now a favorite for the retail. Say you're bullish, we want to come up with a bullish trade. Another thing we want to look at is we want to look at the implied or the IV percent. Right, so we want to look at the implied volatility percentile. So if we go to the Analyze tab in Thinkorswim, another thing we need to do first is look at earnings. The earnings is on 3/11, right? So earnings would be 3/11, not till March, and you know they had good earnings last time. They had $1.64 versus 150. So Ulta did well. You know, we're still convinced that this is it's going to be a strong player next year. The IV rank or IV percentile here, sorry, the IV percent is implied volatility is really low. It's 40%, 40%, 40%. There's not a huge reason to go out and buy and sell option premium in here. And I'll tell you what I did recently. What I did the other day, you can see I have a couple positions in here. I'll show you later. The other day I had actually just put on a limit order, because another thing we like to do is use limit orders when we get those big down days where there's a lot of IV and you want to be in the trade. I wanted to be in the trade, so I actually ended up selling the 215 225 put spread. I'm not going to cover that today because we've got a lot to cover in 10 more minutes. I want to try to end in 10 minutes, but I wanted to go over, you know, what do we look for? So we look for that implied volatility, right? So the implied volatility has to be greater than 60% for us to really take a sell premium. So what if it's under 60%? We can, you know, buy, call, or put spreads depending on where we are. If we're bullish, we'll buy call spreads. If we're bearish, we could buy put spreads. What are some other things that we could do? We can buy, call, or put butterflies, right? We can also do one of my favorites, which is unbalanced broken wing butterflies. So you can do an unbalanced broken wing butterfly, and let's take a look at that actually if you want. But let's actually first look at the selling of the premium, just to show you what I look for, just to see if we've got a trade. And here's where you can use limit orders, right? So option trading isn't all about, it's not like day trading. It's not about where I could put a trade on, I'm making money or I'm losing money. We're not in it for a day, right? I can do right now. I've got a couple day trades on, but that's not what this course is about or video is about. This is about option trading. It's more of a 30-day, 45-day profitability structure strategy that I want to teach in my videos. So if I want to look at this 223 level out on the 200-day moving average, and it's also an area, look, where it can fill the gap, right? So if I'm bullish and I think, you know, I'd love to pay premium down in here, and I can draw this trend line, and I think Ulta is going to kind of stay above this line, and it kind of, there's a nice area for me. I can look at selling that 222-ish. So let's take a look at that. We're going to go to our TOS platform, open up your option chain, and you can pick your spread of vertical. This would be a a front, 1 by 2 vertical spread. You can go out and pick 1 month by 4 strikes. These are your widths of your strikes, but we're going to just stick with the default, I think it's a 1 by 1, basically the smallest width spread that you can do in that particular expiration. So we try to go out 30 to 45 days. So and I have some other orders in here, so you can ignore these for today for the video, but let's say that we want to look at earnings on 3/11, but if I'm selling spreads in here, or I'm sorry, I'm going to look at a spread, but I'm not going to necessarily sell a spread because the IV is too low, but I want to show you what to look for if you were selling a spread. And another thing we would do is we wouldn't go past earnings because the volatility would increase right before earnings and then it would do a vol crush right after earnings. So we're not looking to do anything while we don't want to bump into earnings. So anything at 3/11, which would be after March, this would be the first expiration after earnings, would be March 19th. So we can go all the way out 57 days to February. So if we're looking at a 30 to 45 day trade, we can start planning now for maybe next week, or if we get a pullback. This might be something we'll target in the next week and get your wish list ready. So if we're looking at Ulta here, and I want to look at that 225 level it's selling right now, I can sell that vertical spread for 50 cents. And then what I like to do is bring up the risk profile, the visual of that spread. You have to make sure you come up here and you do a few things. Check your date to make sure that it expires in the same expiration. This would be February 19th, or the Saturday after that expiration would be the 20th. So this gives you that one standard deviation in the light gray here. This would be your one standard deviation move. So I'm close to, the 225, right, which would be my short put. I'm selling one of the 225 and I'm buying one of the 220 for protection. That is close to the one standard deviation. You can come over here and you can say set slices to break even on 220, and then the toss platform will kind of give you those numbers. So this is an 82. It's an 82% chance of being in the money and 17% chance of being out of the money. So this is actually a good trade. So if it happens to coincide, so if you come back over to here and you say, like, if your strategy, in this case the vertical short call spread, short put spread, which is a bullish, right? If that coincides with the probability of profit and standard deviation, then it's a good trade, right? So, but can we do better than that? So we know that the 225 is in that area of a really good risk reward, but I'm losing $4.20, right? So the width of the strikes tells you how much you can risk. So I have a $5 wide, I'm collecting 80 cents, so my max loss is $4.20. That's an easy way to calculate what your max risk is going to be for a trade, right? Most of the trades we do on Options Unleashed is going to be defined risk. I'm not going to go over any undefined risk trades. We're just not in that business of blowing up accounts and being risky. Those are other videos. We will sell strangles now and then, but we don't. Most of the trades on this channel will be defined risk. So the width of the strikes is $5 minus the 80 cents of the credit I'm going to collect for that trade, puts us a max risk of $4.20. The max profit in here is 80 cents. I'm sorry, that we collected is 80 cents again. So you have to ask yourself, and that's why I like to use the visual trade here, the visual slide, the visual screen of, is this a good trade for me? I would like to ideally collect $1 for this or more. So here's where you can use limit orders, and let's just do that. I can type in, I can keep moving this number up, and if you notice, what happens is your max loss will come in, and the more credit that you collect will come up. You see this little lock icon here that tells you that you're locking in a limit order here for Ulta, and this is the price you're willing to execute that contract. You're willing to execute to sell this. If somebody's interested in buying from you that spread at $1.80, this is where you get that order filled. So I can put a limit order out here for Ulta at a price that I'm willing to pay for this, not willing to pay, for the risk that I'm willing to take for this option trade. And this probability of profit doesn't change. So the probability of profit stays at that 82% as long as the stock is right here, right? And as long as the IV stays at a particular IV. But as we know, that IV rank, or the IV percentile, sorry, will increase as if Ulta sells off or we get higher volatility. So that's one of the kind of the myths of option trading that you have to be careful of, is the implied volatility in gray here can change on a daily basis. So if the market in general sold off in the next hour drastically, across all stocks, or Ulta Beauty had a headline where something, was really bad news. I'm being a little extreme here, but your implied volatility is going to change, and it's actually going to change as you get closer to earnings. Another way we can see that is we can add the implied volatility as a study down here. So we can say studies, add study. We can look at volatility studies, and I'll do that really quick here. Add study, volatility studies. I want to look at implied volatility. So here it is. The implied volatility right now is 37%. But the implied volatility, if you get closer to those earnings events, is going to be higher. You can see the vol crush here, vol crush here, vol crush here. Now keep in mind too that during the coronavirus, the implied volatility was off the charts. So you kind of have to ignore the past 52 weeks. In terms of its IV rank, it's going to be kind of a false, it's a false positive, right? Something that I should probably cover as a separate video. Watch out for the IV rank because of the coronavirus. It's going to have an outlier on this chart. So if you're looking back, IV rank is your implied volatility over a period of 52 weeks, so that you can create what's called a normalized index across all stocks. So you can actually now compare that to other stocks. So if an IV rank of Ulta is 23, but an IV rank of Macy's is like 43, you know that Macy's is going to have a higher implied volatility because the IV ranks are normalized for those stocks over the past 52 weeks. So we'll do a whole nother video on that, but basically at the end of the day, the implied volatility is low for us, so we would be ready to put on what would be a limit order. So now it's even 75 cents at market, but again, we can move this number up. And what I typically look for is at a minimum on my spreads. Now I look for $1.60. I kind of start there for spreads to collect $1.60. So now my max risk on this trade would be $3.40 to collect $1.60. Not a bad trade, especially with the 82% probability of profit. So you can go ahead and right click and commit, confirm and send, and commit that order. And you can create that limit order good till cancel. So that's where I would look for doing an Ulta trade. Let's take a look at some other things and then wrap up the video. Moderna would be one that we could look at today. Let's take a look really quick at Moderna. The mRNA. It's an RNA vaccine, right? The messenger RNA vaccine. Moderna is in a nice, and I don't follow it, but let's take a look at it together. Moderna's in a nice uptrend. On the daily, we've gotten some pullback in here. So what I would come in here and I would just quickly, just your eyes kind of go to that trend line. It looks like it's in that trend. I probably wouldn't want to touch it until it broke out of that trend. It looks like it's headed for the 50 or even the 200. But this stock is suffered profit taking, and I'll leave it for the technical analysis pros to tell you where this thing is bottomed. But again, we can take a look at options on this trade and see where we like it. If we're interested in pulling, in pulling out a trade here, you could easily see it coming down and testing these resistance levels. Let's just draw them really quick. There's some resistance in here. We can do all kinds of things. I'm not going to do it in this video, but we can draw Fibonacci. We can kind of get a gauge for where we want to start being in this trade, if we want to be in this trade. So let's look at MRNA and the TOS platform really quick. Same thing here. I have the 20-day, the 50-day, the 200-day. It broke this trend here. You can see a previous trend I was looking at, and it moved up higher. So trends are your friends. They're not always going to work, but I love to use these trends to just keep it slow, kind of remind myself, don't chase anything unless it's, and it's breaking out of a trend, you're okay, but don't chase anything way up. Wait for a pullback, wait for a trend if you're bullish, especially with placing option trades, because if you're buying options or selling options and you're just eating up premium, you're just a consumer and you're not really doing yourself a favor. We're in the business of creating markets, and not creating markets, but playing in the markets when volatility is high, and we want to sell premium. So let's look at Moderna. Let's look at the IV for Moderna. So it looks like it's got kind of earnings coming up here on the 224, but if you take a look, it looks like because it's a biotech, because it's a vaccine play, these implied volatility is 86%, 74, 92. These are good numbers. And again, if you go back now to the earnings, so it'd be on 224. We look at our playbook. We might want to say now, Moderna, is it a buying opportunity? Earnings on 224. So let's look at something that we can do before then. Otherwise, we'll have to wait for an earnings play, because again, that volatility will expand into earnings, right? So right now it's pretty high. It was higher in December. So this is a good idea of looking at your volatility. And again, we typically wouldn't play something like this until it break out or it was closer to. But let's take a look at crafting up a put spread, a credit put spread, which is a bullish trade. And we want to just kind of get an eye for where we think this the Moderna play would be, where we're kind of looking to. You can draw your lines any way you want, but if you're looking, let's say we're looking at this $89, $90 target, we got those earnings again on 224, so we can go all the way back out to, we can go 57 days before earnings, which is a great opportunity to collect some premium out here. And we want to go, we're looking at this all the way down to the $98 range. Is that where we were looking? Let's say $89 range. I can look to sell the 90s at 90 cents. So not bad. And this is, again, let's look at our risk profile for February. February would be here. We look at it and take it in perspective. Again, width of the strikes, $5 minus the $90 credit, it's a $410 max risk. And the actual probability of profit is 75%. Not bad trade as well in here, so we could start to look at this as well. Still a little too low for me, So what we could do is, again, bump this up. Like I said, I would like to collect $1.60 in here, at least to take this trade from a spread, selling premium credit spread standpoint. Now what we would do is we would have this on, and I would monitor it, and if this thing doesn't come in, if the stock doesn't come in and pull back within, and you still don't have, if you go beyond the 30 days to expiration, I might just cancel the order. So we could put that trade on. That's a good trade I would take. So in order for this stock to, in order for it to be $1.60, that stock would have to come down considerably, probably to the back down into the 107, 110 range, which is totally possible, right? This thing can continue to kind of come down and then blast back up. So you have to be patient when you're crafting your trades. Don't chase. If anything that I'm teaching you today is don't chase your option trades. Don't, try to sell premium where possible. Those are the first things you should be looking at. So that's the Moderna play. That's the Ulta play. We'll come back in next week and take a look at these, right? We'll continue to look at these. Let's look at some of the other winners and losers today. Looks like Tesla is up today. If you take a look at our watch list, Tesla's the big winner today, doing well. Let's look at the 5-minute chart. Kind of up nicely today, up $15. The home builders, I'm gonna come back to the daily to show you what I'm looking at. Home builders are kind of trying to go up nicely here. Your Home Depots, your Mascos, your Lowe's, they're your Pulte Homes, some of the other a lot of the home builders, obviously, but in their Home Depot, in their Masco, in their other things. I think Sherwin-Williams is even here. I'm not sure, but your home builders, right? Had a great run. I made money on ITB this year. I sold it at 55. It was just a long position, and looking at getting back in, but I'd like to see ITB kind of stay above that 57. That's kind of our line in the sand. Let's see if it can break out that 60 area, and then we might actually put a position on if it can break 60. So ITB doing well. Apple doing well. Let's look at the 5-minute. Really not much going on today. The market is just kind of, just hanging in there. Not much movement since this morning. Market's probably not going to go anywhere unless there's some bad news. And then let's look at Snapchat, because that's one of the losers today. But I'll tell you why. Like, Snapchat had a news announcement that they had a lawsuit against Snapchat for failing to disclose, it looks like, failing to disclose the competitive threat due to Instagram when they filed for IPO. If you look, a lot of people are kind of disappointed with the IPO. This whole IPO, which happens all the time, right? The IPO performance, and then only recently has Snapchat, taken off. So Snapchat is under pressure today because of that. But here's what I actually like is on this. Look at this 5-minute chart. It's hitting up against my trend line. Trends are your friends. I think Snapchat is setting up for a nice long position in here. We already have it, but we're going to add more. I would consider adding to that position in here. Maybe we get a washout down below this trend line, or right at the trend line. So for next week, if you can get this right here washing out, maybe it might even be for a day down to that 48 level, and then it's off to the races. So Snap is along, and we're not going to sell Snapchat until it actually kind of breaks and kind of goes sideways for a while. But if it gets on the, here's another kind of myth, is if it comes through this trend line, it doesn't mean it's a sell. It can stay on the other side of this trend line. If you see here, for a long time. It can stay here for a long time, and it can continue to go up. So we would look at this as an opportunity to buy more. Probably wouldn't be nervous about Snapchat until it got back into the 39 level, or went sideways for a period of time and then failed to go. So you can set your various stops here mentally or even physically with the platform of choice. But I am a long holder of Snap. Probably buy more because I don't see any bad news for Snapchat for the foreseeable future. I call it a monopoly property, and unless somebody comes out with a better application for kids, and not necessarily targeting kids, but a better application where the kids are using on a consistent daily basis, and they're not coming up with, and they're now finally innovating, then Snapchat's still a buy. Let's look at our playbook to see what else we can finish up on really quick, because I said this would be a short video. So looks like DDD is a long time ago. This was a great stock, but it came back, and the whole 3D printer space did great a decade ago, and then, or sorry, 8 years ago, and then just got demolished. But DDD is breaking that 6-year trend line. So I actually bought some here just for ha-has in my IRA, and kind of giving back some profits today. But something's going on with the 3D space. There's a lot of chase for the industrials, 3D printing, a lot of micro industrial plays, material science plays are happening right now. So you're seeing a lot of material science plays in here. It's probably a head fake, but I wanted to see if I could get this thing. It was just I put on a small position because I wanted to be in the trade. I want to see if it can get back to 20, and then I would take some profits in here. But that's about it in DDD. Don't go crazy on this one. It's mostly due to the EV space. If you really want to look at a play, I have a limit order over here on Nano Dimension at 4, and it just took off. But if you really want to look at a play, Nano, and I can never remember the symbol. It's NNDM. So NNDM is something that I'm watching. Nano Dimension is a 3D printer that is looking at 3D printing of electronic circuits, I believe, and like surface mount technologies and things like that. So that's a huge play for the EV space. This could be huge for them, and I think ARK Invest also added Nano to their list. If you think about where these guys could be in 5-10 years, where imagine printing LiDAR cameras or circuits, this could be huge. This could be huge, and they got funding. ARK is invested, something we're watching. What else is going on? So we had DDD, Snap, Ulta. We talked about Moderna. That's about it for today. Let me just take a look at. Let's just take a look at our watch lists again. My longs, just long trades that I have on today. Coca-Cola, Waste Management doing well. Gold up. Clorox kind of up slightly. Waste Management's one that kind of is peaking out of its trend here. I kind of like it. So Waste Management might be in the cards we own it, but might want to do a bullish setup on that option wise. Other than that, my ugly list, I'm short Bed Bath and Beyond. I'm short let's take a look at some of the option plays I have on. So let's take a look at the Bed Bath and Beyond. And so here, where I was in this downtrend, I played it to continue that downtrend, and here's where I am. So I have a December 31, expiring this week or next week, right? So I have only one. No, stock market's closed tomorrow. 1, 2, 3, 4 days more left of expiration on this. So if I put my calendar here at December 31st or the 1st, you know, this is where Bed Bath & Beyond can go in that one standard deviation move. Set my slices to break even. I still have like a 52% chance that I can stay in the money here. So I'm playing a little bit of Bed Bath & Beyond with an unbroken put butterfly. We'll go into how to craft these up. These are called, these are like put butterflies, but it's called a skip strike butterfly, where you skip the, you skip one of the puts or calls, long calls or long puts, and you create what's called an unbalanced, either call butterfly, put butterfly, and I tend to use those in the direction of the trade, as opposed to some people do the opposite direction. So in this case, I'm actually using it the way most people use it, which is on the short leg, on the front strike, or on the front strike, or the closest strike. You will skip a strike and go lower in this case, and create that unbalanced broken wing butterfly. So I'm risking less on this side. I'm risking only $4.80. I'm risking $14.80 on the low side, but my max profit can be $25 on the high side. So I sold 20 of these, or I bought 20 of these. So max risk is $480, and we like to take profits at 50%. So I'm looking to maybe get out of this from a $480 trade, and looking to get about $1,200 on that. So it'd be about almost 3 times, right? If we get a big whoosh down back to this gap down here, easily Bed Bath & Beyond can easily come back down in here. Retail stocks though are doing well with the reopen trade and the stimulus and all that, but I think Bed Bath & Beyond kind of went a little bit too high, too fast, too high, and just playing that gap down. That's pretty much it. I have conviction. I'm in the trade. We go over when we come back after Christmas. Maybe we'll talk about some things we can do to adjust. I can sell some puts against this if I'm worried that I'm going to lose my, right now I'm in the money, or not in the money, but I have a profit, a slight profit. We don't have a lot of theta decay left, so gamma in here is our friend. If the stock moves down, we would be looking at gamma to help us, get into the money. If it moved down quickly, I could easily take this trade off right now for close to $900. It's probably not going to do that, but if we had some bad news, we would take that off. If the stock gaps up, there's not much I can do, but that's kind of the way we use our spreads or butterflies and things like that. They're mostly, we leave our trades on mostly because, again, we're in the defined risk space. And we also, when we do our trades, we're sizing our trades such that my max loss here is $480. It's a percent. We'll go over that, how to size your trades. That's a percent of my portfolio that I'm willing to use for this particular strategy. And if I lose it, no big deal. I didn't lose $4,800. So that is all we have today. Wish you guys a Merry Christmas and Happy New Year, and thanks for watching the channel. Please subscribe. Have a safe holiday if you're traveling, and let me know in the comments what you guys want to see, and we'll see you probably next Monday. I'll try to do a video on what I'm looking at. So take care, have a good one. See you.